Well, good afternoon, everyone, and welcome to the market wrap for Monday, the 23rd of March. And look, today it was quite an ugly start to the week. At one stage, the Aussie market had plunged by 2%, but luckily we significantly pared back those losses, ending the day down by around 0.75%, still ending at a 10-month low. And this is after President Trump issued a 48-hour ultimatum over the weekend, demanding Iran to fully reopen the Strait of Hormuz or face military strikes, with that deadline ending tomorrow morning local time. Now, in response, Iran warned it would target key US and Israeli assets across the region if its energy facilities were hit. So things just continuing to escalate. Now, at our lowest level of the day, the Aussie market was down over 10% in March, falling into a technical correction, but we did manage to recover a little bit from those lows, as I mentioned. So we are currently down by 9% in month-to-date terms, but still on track to post our worst monthly fall since March 2020, which was, of course, when those first major COVID lockdowns happened. So the worst monthly fall, it looks like, in about 6 years. Now, the major concern for investors is the uncertainty of how long the conflict will go on for. The tensions just seem to keep escalating with no end in sight, and at this stage that's keeping market jitters very much alive. And tonight I guess that could add more layers to the story as that deadline approaches. So it will be very interesting to see what develops over the next 12 to 24 hours. So we'll wait and see how that impacts markets. Now, across the different sectors today, it was a fairly mixed bag. We saw 5 of 11 sectors ending higher. Energy, unsurprisingly, was among the best, and it certainly has outperformed this month. It's up by around 17.5%, of course, amid those global oil disruptions. Materials, however, has gone the complete opposite way. It was down 2.5% today and 21% lower in March. The worst performer by far, dragged down by gold miners, with the gold subsector sliding 33%, and also the major players adding quite a bit of weight, in the likes of BHP down by 20% so far this month. So some very significant falls, although it should be mentioned from record highs which they hit just weeks ago. So it is important to remember that. In the financial space, some groups were actually higher, including insurers, fund managers, and buy now, pay later stocks today. But losses from the major banks held the sector back. So you can see financials down by 0.6%, and notably consumer discretionary gained over 1% in today's session, but it does remain lower in month-to-date terms. Now, in terms of the winners, energy stocks stood out as bright spots. We saw Karoon Energy doing best among its peers. It was up by around 4.5%. Yancoal up by around 4%. Whitehaven still rose despite an announcement on Friday that its CEO sold almost 1 million shares in the company for personal reasons, but he does remain one of the largest individual shareholders. So Whitehaven was up today, and it was also up on Friday when that announcement was released. And retailers actually held up, which also propelled the broader consumer discretionary space. We saw Eggers Automotive, the automotive group, topping the winners list today with a lift of around 6%, while the likes of Premier Investments, Temple & Webster, Lovisa also rose and landed on today's winners list. Now, gold prices have continued to retreat. They're trading around $4,300 US an ounce, and this is after posting its steepest weekly decline since 1983, tumbling more than 10% last week, and that's been dragging gold stocks lower. Today, 8 of the 10 worst performers were gold miners. You can see the significant size of those declines from those gold stocks, and DroneShield also lost ground today. It's now hovering about 6% higher in March so far. Remember, it did get that tailwind in the early part of the month due to it being in the defense space. Now, the Aussie dollar has actually lost ground. It's dipped below 70 US cents. It's currently sitting at 69.5. That's the first time in a month it's been sitting at those levels. It's also lower against the other currencies, including the euro and the Japanese yen. Now, looking looking ahead from here, markets seem to be cautious because if we look at US futures, they're pointing down, but only ever so slightly, down by around 0.5%. So a lot of caution ahead of that Trump deadline. So we'll have to wait and see what eventuates tonight, and that could certainly drive what we see in the local share market tomorrow. See you then.